The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the September 23rd, the magnificent Monday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day, and let's make sure we have an extraordinary one. Now, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial it in at 877-927-6648. Now, if you've got a question, but you can't dial in, send me an email. Send it off to steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, if you're inside our Tigers Den, well, then any and every ping will do. So let's go ahead and get this show started on Marvelous Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. We begin our day with a mixed bag. You got the Dow up 10, S&P up 10, NASDAQ's up 40, Trendy's up 37. You've got the Russell is trading down 10 points. The semis are up 13. You've got gold that's up $5, trading out at 26.51. Silver's off 50 cents, a buck 1 6/10%. Light sweet crude is basically flat at 70.95. Natural gas up 11 cents at 2.83, and a 30-year Treasury off nearly 1 point, printed out at 124.15. Our leader in the clubhouse to the upside is AeroVironment. A $15 move, 8%. Tesla, about a $10 move, or 4%. Costco, a $9 move, 1%. Adobe, $8, 1.5%. Ferrari, $8, 1 7/10% there. To the downside, our shakers are led by Alta Beauty, off $12, or 3%. Moody's Corp down $11, 2%. Transmedics Group down $9, 5%. Talon Energy Corp off $7.60, that's a 4% move, and Parker Hannifin is off nearly $7, 1% move to the downside. Let's begin our day. Let's go take a look at those two of the indicators. New York Stock Exchange, its advanced decline indicator, its oscillator, which is it's in the hands. It's traded above the zero threshold level. That provides buyers with an edge out there. I don't see, it's worked off for the most part, that overbought condition. We don't need to get down to that zero threshold. We're at the 58 setting out here. So what this is just simply telling us is that at this point in time, at 11:09, buyers have the edge. When we look at the very bottom panel of the chart, that's the spot VIX index. Spot VIX is 50-day is at the 1729 level. Price for the spot VIX right now trading out at 1626 out there. So it's below that. If we take a look, and typically when we have the spot VIX index, let's see if it's here. Yeah, we have the spot VIX index trading below its 50-day exponential moving average. That is reflected with these green rectangles, squares, or what have you. Those are periods of time when the spot VIX is below the 50-day exponential moving average. Basically, I like to say the S&P will move sideways to higher. And when it's above the 50-day, that's when sellers are the ones that have control, and the S&P is likely to move sideways to lower out there. And you can see, you can go back. This is a chart that's easy for you guys to create as well out there. So right now, those two indicators tell us that is the buyers that are in control. So let us assist this a little bit. Let's go see what's going on with the charts and technical patterns and so forth. And for that, we're going to go move over to our white background charts. So momentarily we'll be there. We'll have the four daily time frames. In the upper left-hand corner, you're going to see the ES Mini. We're just simply going to expand this out. The ES Mini has an A to B equals CD pattern. It's past the B point. That B point is a trading session of September 3rd. But to just simply tell you that that's a pattern that's going to go ahead and likely complete that pattern, I would be disingenuous, and Stevie is not disingenuous. What we also know is that price is taking on its TD9 count breakdown resistance level. That's at 57.81. And so that's where price needs to close above in order to really say that this TD9 count is going to go ahead, and not TD9 count, the A to B equals CD pattern is going to get some traction and move higher. Look, price is trading above its profile levels. It's trading above its green oscillator and change line. Those are bullish conditions, but resistance is resistance is resistance. Now, if price is able to, over the next couple of days, you can see we're in bar number 9 today. As long as price closes above the close of bar number 5, which looks like it will likely do that, we will get a TD9 count. We will not get a confirmed TD9 count top. Why? Well, because the high of this pattern is on bar number 7. So price will need to spike above that today or tomorrow, it being 57.9750, to trigger that topping signal. We still will likely get a TD9 count. It just won't be a TD9 count top until price takes those levels out. So today and tomorrow, that's really what we're watching for. If you're bullish, you don't want to see price spike above the high from a few days ago, because in that pattern, and the only thing that you're dealing with, which is still where tops can take place, is just simply getting back to breakdown resistance. So 57.81, you need to see a close above that. We've got to see a spike above the bar from bar number 7 in order to generate a TD9 count. If we take a look at the NQ is like, hey, I don't even know what Stevie's talking about out there. Well, yes, you do. The reason you know that is because there's still a TD9 count top that's in place out here from August the 22nd. So not until that high gets taken out, that high, by the way, is 22.51.25, will that topping pattern fail and also trigger an A to B equals CD pattern to the upside. Now, I don't have that drawn in here. If you're asking me where would price target, we know it would target the TD9 count breakdown resistance. It's all-time high, 21.237.75. So there's no top inside on the current session, if you will. No top there. You're only in bar number 3. But if we look to the left, we'll see we've got that TD9 count breakdown. We've got that TD9 count topping resistance out there. We take a look at the Dow. The Dow, much like the ES Mini, could, no idea whether it will, but it could form a TD9 count top. In order to do that, it also has to poke above bar number 7. Bar number 7's high is 42.583. If it does that, then you'll have a TD9 count top, and maybe this A to B equals CD pattern that we've drawn in here that gets up to 43.50. We'll just have to take a break out there. So we're going to watch both the ES and the NQ on their daily time frame to see if they can tick above the bar from September 19th out there. And if they do, then we've got TD9 count tops. And if they don't, well, we likely have these A to B equals CD patterns coming to fruition. In the Dows, it's much easier because there is no resistance out here at all. We're trading at new all-time highs, so no resistance there. In the case of the ES Mini, well, we've got that TD9 count breakdown area. In the case of the Russell 2000, it does have an A to B equals CD pattern to the upside. It has formed a new profile, or is forming a new profile. And what I mean by that is that I've got different support levels for these profiles. For example, the white background chart has got 2194. You can see that. It's right in front of your eyes. If I showed you the black background chart, you'll see 2212. So those are the two levels to identify as potential support. I say potential because we won't have a confirmation of this profile until this evening. If we take a look at the top of the profile, this is where we have unanimity. This is where we have a unanimous agreement. There we go. And that's at the 2286 60 level out there. So that's our resistance level inside of the Russell 2000. So we get back from this break here. We have a few questions that have come in. So let's get to those. We got to take a look at EWH, KWEB, Apple, Silver, AT&T, and Goldilocks. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's take a look at our first question out here and make sure I'm in the right spot. I am. It's for GTE. Wants to take a look at ticker symbol EWH. GTE, on a daily basis, today will become bar number 8. That says you should see a short-term top form between today and Wednesday out there. Where would price pull back to? I would say there's really a couple different levels I'd give. The first would be 1665, old resistance that could become new support. And below that, about 1637 today, that's the oscillator change line on a daily time frame. The weekly chart looks very bullish. We're in bar number 7. Of a TD9 count. Last week we closed above a breakdown resist, a sell zone on the weekly basis. That was between 1603 and 1638. Another level of support would be 1638, the top of the weekly profile. And on a monthly basis, last month, this confirmed a Rhodes Momentum Indicator bottom pattern. And price right now is trading above. It's trading into its sell zone. And that is between 1672 and 1776 out there. So the call here on EWH is a TD9 count top to go ahead and complete by Wednesday. A retracement back to support on the daily time frame. And then if it finds support at that green oscillator and change line, and then a test rejects that and moves and closes higher, we're likely to see the rally continue. And from there, and then that's what the weekly and the monthly charts are telling us. So that's what we see GT when we take a look at EWH. You also want to take a look at KWEB. And if we take a look at this is going to go ahead and confirm a TD9 count top today, complete that pattern tomorrow. That too is suggesting a retracement. The level of retracement that I would be watching is likely 26.77. If tomorrow price closes above 26.77, then on a retracement, if it's only a counter trend move to the downside, GTE, where price would find support would be between 26.33 and 26.77. The weekly chart looks good in that it's trading above the top of its weekly profile, 27.14. Watch that at week's end. If we close below it, then you know you've got a bit of a consolidation pattern going on. And on a monthly time frame, that's exactly what you have is a sideways consolidation with inside its profiles between 25.53 and 32.64. So prepare for a short-term top to take place either today or tomorrow. You'd have to go take a look at those intraday charts to try to identify that. I'm looking at a 30-minute off screen. I don't see that forming just yet. So thanks so much for your request, and have a marvelous Monday. John C. inside the Tiger's Den would like to take a look at Apple. So we take a look at Apple. What do we know about it? Well, I guess everything is completed here. So we take a look at Apple. On Friday, Apple made its way back to a prior swing point. That was a swing point from August 29th. There was 51.9 million shares that day. On Friday this week, what we did was 318 million shares. Now that could be because of the S&P do a restructuring. That's not the right word. You know what I'm saying out there. But hey, look, volume is volume. And so it was most certainly pushing into that swing point with volume. We've tested it again today. So again, that swing point, August 29th, volume of 51 million shares. Today, rebalancing. Thank you, Mr. Bill. It is up with 15 million shares. So 15 so far, 2 hours of trading. Going into 51, it could be similar. Looks like it'll be a little bit light a little bit light. So if it does reject that swing point, what I mean by that is close below 228.88. That could be suggesting that price would get back to the 224.92 level. Below that, we'd be looking at 220.82 to 218.08. On a weekly time frame, price has been consolidated with inside its bear structured profile, John, and that's between support at 212.49, a sell zone between 224.86 and 228.98. Those would be the levels. The monthly chart for Apple is bullish. It's traded above profile, traded above its green oscillator change line. So you're bullish on the monthly. You're really bullish, if you will, on the weekly, just a consolidation. And in the case of Apple, let me just open up this daily chart, see if there's anything else to the left that we need to be paying attention to. Well, so this would tell us that if price were able to close above that high from August 29th, and that high is at 232.92, that would trigger an A to B equals CD pattern to the upside. You would still be dealing with the resistance factor out here, John, from the high of July 15th. And there's where we've got a Rhodes momentum indicator top. It's really the high from the following day, July 16th. That's the level of resistance that price would need to close above. 236.27 out there. And if it does that, then we're likely headed higher. So in the case of Apple, other than a test rejection of a swing point, and we're trading above resistance at this stage here, not really much that's going on there. Let me take a look at an intraday chart for you. Let's see what we have here. On a 65-minute basis, we use 65 minutes, folks, because they're equal, because there are 6, 12, 13 65-minute bars in the trading day out here. We like to have equal time frames. Now, Apple formed a Rhodes momentum indicator top. It closed below its bullish structured profile right away. We are now testing the level where a counter trend move would end, and that's at 229.38. So that's on a 65-minute time frame. We'll move this over to a 30-minute chart to see if we've also got a top there. Disregard the oscillator and change line here, but this has also a Rhodes momentum indicator top. Price trading below is a trading below profile, and that level there is 228.75. As long as price remains below that. That would be that could be signaling that the last bar was potentially setting up the C point of an A to B equals CD. I'm not making that call. I'm saying that's the potential, especially if price were to now begin moving lower and take out the low from early this morning at 10 o'clock at the 225.85 level. So in the case of Apple out here, that got the test rejection, that swing point, and the intraday charts are suggesting you might see lower price out there, John. I hope that gave you the information that you were looking for, and thanks so much for taking the time. Geez, I didn't get this set up in time. So I'm going to do pearls. We come back from the break, which is going to be over a minute from now. We'll take a look at silver. I forgot to get that up. But what we do have is Mr. Bill wanted to take a look at the seasonal cycle for the S&P 500 out there. And I just want to go back to see Mr. Bill's question. Where was it? Where was it? Steve, the discussions of cycles inside the den. What does your work say about monthly and quarterly on the S&P 500? So if we take a look at, this is the S&P 500. This is a 96-year chart that we've got. The red vertical line is where we're at today. We are approaching where we should find a bottom. And that bottom typically comes in around September 30th. So that would be next Monday, a week from today. So, but of course, we know that we've been trading higher, right? We've not been trading lower inside the S&P 500. But that really wasn't what Mr. Bill's question was. His question was specifically, what do the seasonal charts show for the S&P 500? They also show that we should bottom, truly bottom, where we start that Santa Claus rally at the end of October, mid to end of October, and we just continue to move higher. From a quarterly basis, because we are ending September out there, I would have to say that the fourth quarter, which would be the 3 bars on the very bottom, that is a favorable seasonal pattern out there. So that's over the 96-year period of time. Here, if I put up the seasonal pattern for the election cycle out there, you'll see this, which has got 25 touch points out there. And here, the S&P 500 is not supposed to bottom until the end of October. But we're moving higher. We have not been moving lower. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry August 9th and 23rd for more live trading action. For this month only, use code LarryAug24 at checkout to save $50 off your first month as a subscriber to Live Trading Fridays for his live trading sessions, where you'll sit right beside him as he trades the market live. For this month only, enter code LarryAug24 and save $50 off your first month. For all the information and to reserve your spot today, visit the front page of TFNN.com.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So we're taking a look at silver. This is for pearls inside the Tiger's Den. And so we take a look at the monthly time frame chart out here, pearls. What you can see is that price is trading above the green oscillator and change line and the top of its profile. Those are bullish conditions, period, end of story out there. If we look at the weekly time frame, let me open this one up. Again, we're looking at the December contract. The December contract on a weekly basis has a Rhodes Momentum Indicator top. So when it formed a bottom, it was a Gartley buy pattern. Here's the A to B equals CD pattern. So it's a weekly Gartley buy pattern. Here's your A to B. I'll just move this over to the C point out there. Whoops, let me try to. Come on. Oh, come on. There we go. Move this over like that. You can see it was a little bit more than a 1-to-1. A to B equals CD was confirmed with that bullish engulfing candle out there. So now you got a Gartley buy pattern with price targeting this most recent swing point high here, which would be back in July, and that's up at the 32.46 level. That's the message of the weekly time frame chart. We look at the daily. The daily has an A to B equals CD pattern. It has attained the 1-to-1 level out there. Let me just pull this back. You can see that. And therefore, what we're watching for here, pearls, is whether or not a bearish reversal candle forms. If a bearish reversal candle forms, that will go ahead and confirm the sell the D point top, a Gartley sell pattern here. That would then suggest that price would pull back to support. And support would really be the bottom of its profile. That's where the oscillator and change line is also sitting. So 30.52. If price doesn't do that, today's bar number 8, but the high came in on bar number 7. That says that if price were to poke above the high of bar number 7, and that is at 31.75, and do that either tomorrow or the next day, you could then have a TD9 count top. Right now, we don't have that. We just have a consolidation with inside the daily profile. What you don't want to see is a bearish reversal candle, although that might just mean pulling back to test support at 30.52 out there. That's the daily time frame. If we look to intraday signals out here, what do we see? We see a TD9 count top on the 30-minute basis, took price right back to support. Therefore, the move to the downside might be over. That was a bullish structured profile. Here, this suggests that silver on a 30-minute basis ought to go target 31.32. A bit of a rally. 60-minute time frame chart, no topping signal. The same with the 2-hour. The 4-hour maybe has 4 hours got a Rhodes Momentum Indicator top out there. 5-hour, the same pattern. So at this stage here, the 30-minute chart is suggesting we ought to rally, see what happens. See first if price gets up to that 31.32 level, or does it take that out? If it takes it out, then the TD9 count pattern that's in place out there, the TD9 count top, will fail, and that would suggest heading to higher ground. So let's do this here. That was silver, pearls. I hope that provided you with the information you were looking for. I'm going to go ahead and go over and take a look at gold, and then we'll go to the GDX just to try to kind of keep this in somewhat of an order out there, because Rob wrote in and he said that GDX appears to be topping at least short term. These are not the charts I wanted to go to. Not that we can't go to those charts. I wanted to go to the full set of gold charts. So we take a look at the monthly time frame. Monthly time frame is going to negate a TD9 count top out there. That top came in 2 months ago, and all that needs to happen is a close above 25.3770 come next Monday. Seems like a likely outcome. On a weekly basis, we have no topping signal out. Well, we have don't have a topping pattern signal, Rhodes Momentum Indicator signal, but that requires a bearish reversal candle. Short of that, price is in all-out bullish mode. We're trading above its bearish structured weekly profile out there. We look at the daily time frame. The daily time frame is going to form bar number 8 today. That says you could get a TD9 count top that would complete between now and Wednesday out there. So that's why these intraday charts that we're going to take a look at in a moment. So is gold getting ready to set up a short-term top? Well, the last time we had a TD9 count pattern, it formed on bar number 8, was back on August 20th, and it led to nothing more than a sideways move. Price never even got down into the buy zone, so to speak. Well, it got to the top of the buy zone, which was the top of which was really the center of the profile. But that was a bullish structured profile there. So short-term top, yeah, definitely is what looks to be setting up, and that really segues right into Rob's question of maybe the GDX is showing a short-term top. So we'll take a look at those signals. But here on the 30-minute time frame, you see gold had a TD9 count top. Price tested, in essence, this is a buy zone, the 26.50 level. We're trading above the green oscillator and change line. We ought to see a run up towards 26.59. On a 60-minute time frame, I don't have a topping pattern that is in place out there. I do have a T9 count top that will complete at 2 p.m. on the 4-hour time frame chart out there. Price has been above that green oscillator and change line. I wouldn't be shorting anything unless price got below that. And that would be intraday type trading out there. And then finally, we take a look at the 5-hour time frame chart. A close above, maybe we already did I want to check, 2652.50. That close was 2651.90. A close about 2652.50 will negate a 5-hour TD9 count top out there. So how do we pull all this together? Well, the first thing that I want to do is let's go over and take a look at the GDX charts, and then I'll try to pull it all together for you. So I'm just simply going to go ahead and close these down, free up some resources out there. We'll take a look at the GDX out there. This way we're taking a look at the entire complex at the same time. That's not the GDX. Well, it's got the daily and the weekly time frame. But I think what I was going for was this. No, that was Apple. It was the next one. It's this one here. So we take a look at the that's not it. Let's try one more. Let's see. The third time is the charm out there. When we look at a monthly time frame chart, very right-hand side, this is for the GDX, you'll see that we are in bar number 7. We're traded above all kinds of resistance, whether it's the oscillator and change line, whether it's profile. Long-term, the GDX wants higher price. On a weekly basis, we'll call that the intermediate term time frame. The intermediate term time frame negated a Rhodes Momentum Indicator top last week. That top formed on August 23rd. That high was 39.97. We closed above it last week. No topping pattern in place right now on the weekly basis. This says it wants to continue to head higher. When we look at the daily time frame out there, we do not see any kind of a short-term topping signal. Rob, at least when I'm taking a look at it, and let me explain why. So first I'm going to get rid of that A to B equals CD pattern to the downside. So we know that gold the GDX formed a TD9 count bottom. It did that on September the 6th out there. You can see that we're only in bar number 2 right now. And in fact, on Friday, price negated a TD9 count top that had formed out here on August 20th, the 21st, and then finally the 22nd. So that top was negated on Friday, and the GDX is suggesting to you and I that it wants to head higher. In fact, there is a short-term A to B equals CD pattern to the upside. So let's just simply draw in the A to B point. Let's try to move this over. Should be able to do that. Move this over to the C point out there. And here what you'll see in the case of the GDX and the swing point, I had volume out here. Let's see, this bar number 8 was 21 million shares. When it was passed, it was with 27 million shares. So there's a confirmed A to B equals CD to the upside with a price projection around 42.20. Please don't hold me right to those last couple of digits out there. That was in essence an estimate out there. So do I see a short-term top in the GDX? The answer is I do not. However, and Rob knows this. I know he knows this instinctively, that the GDX and gold are directionally correlated, highly correlated. So if in fact gold is going to form a TD9 count top, then I would say yes, the GDX would also likely take a timeout, even though it's completely bullish, daily, weekly, and monthly. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. Now, before we go take a look at the charts for AT&T, I want to continue the discussion with gold, with metals, basically. So what's the one thing that could, well, there's a number of things, but what's the one thing that could really get in the way of gold topping? And we took a look at that potential for that TD9 count top that should go ahead and complete by Wednesday, and it would be this. It's the global flow of capital that's going into gold. Now, if we take a look at gold here, we've got many different currencies, how gold is trading in those currencies. Upper left is U.S. dollars. You can see we're at a new all-time high today in it. We're also new all-time high today in terms of euros. We're an all-time high today in terms of pounds. Forgot to change that. Give me a moment here to put this over there. We are also new all-time. I didn't even do it on the Canadian loonie out there. We're new all-time high today in Canadian loonies out here. Give me a second to move this. For example, today it would cost you 1,969 Canadian dollars in order to buy 1 ounce of gold. If we take a look at the Swedish krona, we're really close to an all-time high today. 27,338 krona would buy you 1 ounce out there. I'm sorry, 27,146 right now. 27,338 was the high. So we're very close to new all-time high there. Not so much in the Swiss franc and the Chinese yuan we are, and very close in terms of Australian dollars. These are the major currencies out here. They're not sellers. So the only, some might be sellers, but the ones with new all-time highs, unless they truly see some kind of topping signal, no. And with all the geopolitical stuff that's going out there, especially that in the Middle East right now, if we take a look at gold priced in every single major Middle Eastern conflict country out there, where do you think we're at? New all-time highs today. These people are buyers. People don't want to have their capital in areas where there's major wars going on, where there's boots on the ground and everything. So it is a powder keg over there. And this is what could truly either get in the way of that TD9 count top, meaning that we just simply blow right through it, or that it's just some kind of sideways-ish type move. But know this. We're at all-time highs in terms of gold in all of the Middle Eastern currencies and most of the major currencies out there, and that's what could get in the way of trying to believe that gold or even the GDX might take it to the south. So just something to consider out there. Hope that helps you out. Let's go take a look at the AT&T right now. This is for Rich. He's looking for a re-entry point. So in a moment here, we'll change our screens, get back to those white background screens, and we'll assist with that question. So we're going to look at the daily time frame. Daily time frame has a TD9 count top, Rich. That formed about so I'll tell you when it formed. It actually formed on the trading day of September 16th. We are now back inside its profile. below its green oscillator and change line. It has lost its momentum. The TD9 count top suggests that price would pull back to its buy zone. You're asking for a re-entry area. That re-entry area should be between 2025, 2035, and 2056. That is your range. If price were to close below 2025, that would tell us that the buyers have problems out there, and we'd likely see lower price. Lower price to where? Great question. Well, first, right now, the lower price could be only just simply be back to that 2025 level. If we look at a weekly time frame chart that's going to go ahead and confirm a TD9 count top this week, well, it'll do that as long as on a weekly basis price closes above, which is a likely outcome, 1990. We're at 2140 right now. So you're going to TD9 count top there, matching what we've got in the daily, and that brings open 2064. So I still would say that your buy zone is between that 2025 and 2056 level. The monthly chart for AT&T says you want to be on board. So we all understand Rich's question of looking for a re-entry point. Why was that? Well, because we are negating a monthly TD9 count top. We're doing it right away. This says there's strong momentum to the upside. Where would that momentum take us next? Well, you'd have to say probably to this swing point from the month of May in 2021, and we've already tested that low, which is down at 2165. We close inside that swing point. That would almost assure us of getting up to that high. That's at 2559. Now, volume there was about 1.2 billion shares this month so far. We've done 681 million. So we're coming into a lighter volume. Doesn't matter. We're negating a monthly TD9 count top, says it wants higher price. So it's going to be the weekly and the daily, Rich, that you need to keep your eyes on out here. And but I'm going to go with that, with that range, 20 and a quarter to 2056. So I hope that helps you out with regard to AT&T. And thanks so much for taking the time to write in. Now, I don't see any other questions. Nothing else. If you do have something inside the den, you can just go ahead and post it right now. Just checking the email system just to make sure. Nope, I've got nothing. Zero. Nada. So what do we want to do next out here? Let's do the following. Let me just take a quick peek at let's take a look at natural gas. Let's do that. So actually we could do this here. Let's take a look at the November contract for natural gas. Get that up on our screen. That is in full breakout mode. Got a nice A to B equals CD pattern. Got a nice wide-ranging bar. A price going to target the 264 level. Now, this is not showing you the A to B equals CD pattern. I'm going to draw that in for you, though. So the A point, easy to identify. That's the actual low out here that formed that Rhodes momentum indicator bottom. Let's try this one more time. Why is that not working? Wow. Okay. That's very weird. All right, I'm not going to be able to draw that in. The A point is the low of September 3rd. The B point is the high of September 17th, and the C point is a low from the 19th out there. So 1-to-1 would take us to 264. That retracement, let's do this here, because I'm going to just switch screens. We'll take a look at it that way. But you can see the TD9 count bottom, Rhodes momentum indicator bottom on the daily, Rhodes momentum indicator bottom on the weekly, and the monthly, not so much. What the monthly is trying to do is get back inside its profile level. That would require a close on next Monday above $2.82. If price can do that, we're $2.83 right now. It'll be back inside its profile, suggest to run to the 308 level. So that's what these charts are telling us. But let's go take a look at the other set of charts I've got so I can actually show you that A to B equals CD pattern, assuming somebody wants to actually see it. That's what we're going to have out here. And here is the daily. And so on the daily time frame, what we also know is that this retracement, these B to C retracement, is only 51%, so less than 61.8. It increases the odds that we do more than a 1-to-1. What's the next thing that increases those odds? We're trading on the left side of that C to D leg out there. That tells us this move is stronger than the A to B leg. That tells us we should really do more than a 1-to-1. 1-to-1 is 264. 1-to-1.272, 275, the 618, 161.8, 289, and the 1-to-2 move, $3.05. None of those are off the table. No way, not off the table, especially if that monthly chart is able to close above, what was that, 282? I think, let me just give you that figure one more time out there, because that would add to it to be 282. 2.825 to be exact out there. So natural gas looking good, even though I believe we are in the unfavorable seasonal cycle. Let's go check that out. Let me make sure I'm in the right place. Let's go see what natural gas's seasonal cycle looks like. Popular instruments. Wow, that's really crazy. I don't know what's going on with the mouse here. Is it the mouse or is it Stevie? Stevie just blaming it on something? Natural gas. Here we go. The answer to that question is no. Now let's do this here. Let's take a look at natural gas, 33-year period. So here's the 33-year period for natural gas. Now, we're in the month of September. You can see month of September where my cursor is at. You know, it's kind of somewhat flattish between the beginning and the end out here before we start heading into the unfavorable seasonal cycle. But even though that's the case out there, you know, natural gas got beat down quite a bit out here. I can't tell you why it's rallying. I just know that it is. And I know that even though that's the favorable seasonal cycle, that is not what the charts are communicating to you and I. Steve Rhodes with TFNN. We'll be right back.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. Let's see. Do we have a question? SBLK. So let me change screens here. We'll go take a look at that to close out the show. And when we get to everybody's request, this is not it. I was going to take a look at Russell 2000. Let me just quickly here on the Russell 2000, which is the weakest index, the weakest equity future contract. I was looking to see if I could find any bottom. The only bottom really pattern that I can see out here right now is on the 60-minute time frame, potential bottom. We're price getting back to its breakout level of 22.39. We know that that can be a bottom out there. So if that's the case, we should see a rally. The rally ought to take us up towards the 22.55 level out there. So that's what's going on in the weakest of the indices, the equity future contracts that we're taking a look at. Let's go take a look at SBLK. This is for McGuppy inside the Tiger's Den. So let's get this started out here. So this formed a nice Rhodes momentum indicator bottom on a daily time frame. Price is trading above its profile out here. And what you're watching for is bar number 8 is going to form today. And if price is able to tick above 21.90, so far the high for the day is 21.90. It's got to tick above 21.90. If it does that, then we'll have bar number 8, and you could get a TD9 count top that would complete by Wednesday out there. Pull back towards support being 20.92 on the daily time frame. On a weekly time frame, you have a TD9 count bottom. That's a beautiful thing. That suggests that it wants to rally up towards the 22.15 level. But first, you've got to contend with today and tomorrow and Wednesday, because this thing could easily poke above that high and then go ahead and generate that TD9 count top. That would suggest a pullback before price resumes higher. On a monthly basis, you have a TD9 count top. But price has completed its pattern, meaning that price got back to support, did that last month, and it held it. It tested that support again this month, and that is at the 2025 level. So this is suggesting SBLK ought to rally up towards 23.40. So the weekly and the monthly say it should rally. That's why you could end up getting that TD9 count top on the daily time frame. Folks, thanks so much for joining me. I'll look forward to being with you again soon. That will be tomorrow, 11 a.m. sharp. Have a wonderful day. Take care. Be safe out there. Stay tuned for all the great programming.